Hi viewers, today I want to take you through the basics of forex trading. So the keywords in forex trading is bullish market, and bearish market. Bearish market. So the bullish market is when the curve is moving upwards, when the people are buying, so the curve moves upwards. And when the market is bearish, then it means the market is moving downwards. So the forex market really moves in this way. It moves in a zigzag way. So the upper one, this one here, we call it the bullish market. And when it is coming down, then we call it the bearish market. So this is the bullish market, and this is the bearish market. So to understand this, the market does not really move in this way, but it goes up until up to a certain level, then it start coming down. So when you see something like this, then it means this market is going up. So this one is what we are representing with this single line, the way it is moving. So for you to know that this market is moving up, you will look at the upper, lower, and the lower. So you will realize that this market started at this point, it moves up to this is called upper, lower. Then this one here is called the lower. Then this is another upper, lower, the lower. Then this is the upper, lower, upper, lower, upper, lower. So this market, this one, when you really check this thing keenly, you will find that this point here does not pass this point. So that when you draw a line here, then you will get a straight line moving upwards. When you draw a line here, you get a straight line moving upwards. So in this form, the market will be now bullish. You can buy. When you want to trade, you can buy. Then after buying, maybe you buy at this point, then you take profit at maybe this point. When you buy at this point, then you take profit at this point, you will have a good amount of money. Then now, for us to know how the bearish moves, for you to know that the market has started going down and you need now to sell, is when now instead of coming up to here, then moving up, it will now come and pass this lower. It will come and pass this lower. If it passes this lower, it should not pass. So when you check this, you will get this one is not passing, this one is not passing, this one is not passing this one is not passing this one is not passing this. But now when it passes this way, then it means now the market has started becoming bearish, and it means now you can sell. When trading, now you can sell. So in this case, after passing this lower, after passing that lower, then now the market will start moving downwards. So it will move in that trend, coming down. And make sure when studying this, make sure this one here and this one are not in the same line. This one and this one are not in the same line. This one should be lower than this. In this case, I've drawn a wrong one, so it should be somewhere here. It should not reach this upper part. should not be in line with this one. This one is okay because it is not, this is not in line with this. This is also okay, it is not in line with this. This is also okay, not in line with this. So this in this form now, the market will now becoming bearish, and then when you are trading, you need to sell. You need to sell for you to get a profit. Then in some cases, you will find that after reaching here, then instead of the market, after reaching here, instead of the market continuing going down, now for you to know that this market again has started going up, then you will realize that when it moves, when it starts, let's say when it moves up to that point, when coming back, it does not hit this, it reaches somewhere there, then started going up again. So when you see this, it has not reached this point, it just reached here, then started going back. So it means this market has started now going back. So it will move again in that form. It will move in that form going upward. So you will have upper, lower, 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 upper, lower, 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 upper, lower, 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 as the market continues. In some cases, when many banks enters into the market, then they will try now, let's say the market was going up, so let's draw another one here. The market was going up, so we have this. Then instead of going up, then it started now just moving in this form, in that line. This means the market is trying to go down, and at the same time is trying to balance. So it is trying to balance at that point. Now when it is balancing this way, and then the lower has not surpassed this one, has not gone below this, then it means this market is still going up. It will just move at that point. Then after finishing, after being stable, then it will start just going up again. Will start going up again. So it means here the market was trying to balance. People were entering the market, so the market was trying to balance there. So when you bought at this point, then you see this, don't worry, this market will still go up. You can even buy it at this point, at this level up here. Then you end up getting your profit. But if you are afraid, then when you buy it at this point, just come. When it is at this point, stop, take profit. Or when it is at this point, just take your profit and go. But when it moves this way, then after reaching here, it tries to balance, and then after balancing, it moves down past this. Then it means now this market is going down because it has moved past lower. So the market will start moving down. So when you bought at this point then, and you've realized that after balancing here, it started moving up past this, immediately after touching this, then it means now that market is going down. So you can stop, close the trade, or you can just close the trade to avoid losing a lot of money. So that is what I wanted to take you through today, the basics of how we trade. Then I'll take you through now the real trading in our next session. Thank you.